Okay, guys, good morning. How we all doing? So here we are. It's the 14th of November, kind of middle of the day. Now, I started the poll early today just to, I was kind of curious if we'd get more participation. Some of you maybe that, either from work schedule or life schedule or just different time zones here. So I was glad to see all the participation now. So gold was the front runner here in terms of your choices. Now, so I'm going to do it on the CFD just for some members may not be able to handle the futures margin, so we'll do it here. So you'd have more options here, but technically be very, very similar. So now one thing that I don't know if it was a member or someone on YouTube made a comment here that it was very right. On Oanda, we only have data here as relates to TradingView back to 06. Well, it's a bit problematic here. So if you just look around here, we go to a different exchange, we can get more history. So here I am. We're all the way back to 1976, right? So now this gets a little more interesting, and particularly, you put it in log scale, which certainly would be warranted from our low down here at $100 to 1900. So the wave count kind of pops out at you here, so we can get a 1, 2, 3, 4 would imply that we're seeking our 5. So we'll take that out of the log and bring that back over here. Okay, so with that established here, so I've just used the text tool to draw these in because I don't have the history. So dominant 3 here, down for the 4. This is what I meant to say. So if I come back here to this weekly, so here the 4 here, assuming this is how this is going to play. So this would be here at our 50. Now, if we come back here, and then because this is where I have the detailed count, so this would be our 4 seeking the 5. But, so that's just something to keep in mind. Now, I've adjusted this count from the last time that we looked at it here, just upon a closer review here and given the price action here. We certainly have had a lot of volatility in gold. Now, note, I'm out here on a daily. Right, there's big macro trends driving this here, so I would encourage you daily, weekly, get the bigger picture. That's where the count, I think, is most effective. Now here we had considered this the possibility of a 1-2-1-2, but on a closer look at it here, you can dig an ugly diagonal out of this as a potential 1-2. But looking here, this is not much of a 3, so you can dig an impulse out of it. So what I think on closer review here, I think we just have a flat, right? We're going here now, and it qualifies. So I have the trouble with a flat often is qualifying the B. So here's our 887. So we do get 90% here, the retrace for the B of the flat, and then again, this is much more indicative of an impulse coming down. So that said, I think what we get here is, you can think of the flat, right? Just like a big box, right? It's not unlike what we were looking at as a contender in the S&P the other day. All right, we don't get a new low here for the C wave of this, but it's not a running flat because we don't get an expanded B wave. But I think the count, it fits better here. Now, what is it? And we've looked at this last time we looked at this. So from our low here, we do have a golden corner, right? It's a textbook, absolutely couldn't be any better. I can't make this shit up in Photoshop. There you go, right? So that is on the daily, right? Golden corner pocket. Right? I know, right? So how long does it take? They are astonishing when you see them. So there's August of 18, and when do we hit it? August of 19. That's a 1 year. What do we go from 1160 to 1557? Yeah. Coincidence? I like to say, I'll let you draw your own conclusions there. So I think this plays better as our 2, so we're seeking the 3rd. So if we draw that up, just using our most common fib relationships coming from the 2, right? So this is going to be textbook, right? Since we're in the golden zone. Here's the 1618, so we're seeking the 3rd up here, right? Now, nothing says we have to stop here. But if we're going to get into the count here, but if we're coming down here, and I think there's a reasonable case to be made here that this may not be done, that there may be one more push down here. We'd be heading up to get the 5 here, which would finish the subdivision here of the 3 that's underway right now would give us our third here, 4, and then up for the 5. Maybe we get up here, we get the, remains to be seen how far we're going to go there, but we're talking, pushing, certainly testing the prior highs. Okay, with some of the things that are going on in the global economy, I think this is not unreasonable. All right, so let's just break this down and get down to this where we sit here. So if it wouldn't affect your trading dramatically, whether you were looking here as a 1-2, right, and then yet again going 1-2. But in terms of where our ultimate targets are, that would be impactful. So I certainly would keep this set of median lines somewhere right now. Someone also showed me, this is cool. I've been struggling with this lately here, the old version here, but they've got this new version here. It was really quite nice here of the, what do they call this, the object tree. So if you want to take something off, and this is, I like the way they've done it. It's just easier to find everything. So if I wanted to hide that, but then very easy to bring that back. So, they continue to improve it. They won't fix the one damn thing I want them to fix, which is grabbing these, moving every one of them. So annoying. But I digress. All right, so I would certainly keep this somewhere. I mean, can we frame the market any better? Right, perfect golden corner. So I'm going to take it off here just to declutter the chart as we look at it. But I wouldn't lose track of that. Oh, do I have it twice? Do I? Maybe I do. Huh. Well, I guess I do have it twice here. So let's take one off and then put you back. Yeah, I've got it twice. Okay, there we go. All right, so now I know what the hell I've got there, right? I'm still learning this myself. Okay, we'll take that off. Okay, so 1, 2. All right, let's go from the daily. Let's drop down here slowly, 8 hour. Going to give us a look here. So per the assumption that this is our 2 here, this looks like a reasonable contender. Yeah, this is a little tricky in here because it's hard for you to see that here at this scale. But it does look like we go 1, so this would be 2 here, and then yet again 1, 2, 3, 4, and that gives us the impulse of our third here. So this relatively shallow, right? We looked at this. Right, last time we took a peek at gold here. So we don't quite make the 50. You can see I had highlighted this from the last time we looked at it here. We don't quite make the 50 here. We do get this low, and then we go 1, 2, it appears. And then we get our 3. We get this chop is into our 4, and then 1, 2, 3, 4, 5. So the Elliott is helpful here. It's very clear, not hard to follow it, right? So here, right, so this, now this would be our shorthand, but because we don't even make the 50 here, it doesn't surprise me that we're to and through here. At least just in terms of that shorthand marking. Now, let's get this off of here. Now, this is where it's getting a little tricky here. So certainly, some of this structure, we'd want to have this one wave wicked off. But as would relate to the potential impact of this 4, this is the one wave we want to pay attention to. So just, I just do this force of habit here. I don't want to lose track of them, and it just sometimes it can be useful to kind of frame out the 1 and the 2, right, or even the 3 and the 4, looking because those are common. Well, the 1, of course, obviously is something to pay attention to. 3, 4, commonly that's a retrace point that you'll find. So these can be useful, right, just to keep track of them. So yeah, I'll take this off here because I don't think we need it for this example. But certainly I want this 1 wicked off. And then this 2 here, assuming we've got this little double bottom here that gives us our 2. Come here. I want to pay attention to this as would relate to what we've done here. So there you go, right? So right from the wave 2, right, 38 would be, can you script it any better? Right, so I got to go down to a 3 hour to dig into what's happening here in this correction. So this is a little tricky in here. So a bit of a judgment call needs to be made here because this is not your typical triangle. But working off of this, so the first 3 here is, which hard to argue with that one, right? And it's technical. Whoops. All right, so we do break the golden zone here. Get this right on it. So we do get this break here. Right, wouldn't disqualify it if this is an A, B, so it looks like we get an expanded B wave of this corrective B here. So this is A, B, C into the B. We hold the 786. All right, we lose the sell side algo here. All right, but we come down. It looks like You know, or perhaps they stayed with it. Could be they used the 707, right? We never, do I have it? Right, so there's the 707. Looks like that's what they used. Nice square root of 50. So could be, right? We're always kind of, if it doesn't hold, it's always a question mark. What did they use? Could be that they used the 707. So what you're inclined to look at here is, well, we did go right to target, right? And then we got the reaction. So that could be it. Hard to know. We're never going to know. But now this to the tick here, right, is that potentially a front run? Well, you got a couple of things that could be involved here, right? So all of this structure coming into play here as we come back to that market acceptance here. Often, right, we get a little low volume divot. If it's not going to blow right through it, that's where you'll get the pivot, and that's what we get right here. So, yeah, let's see, get this dialed in. Okay, so if we look at this, my guesstimate here, best estimate here because of this chop, is that we've gone into a W. We get this, it's not pretty. We get an X wave here via the A, B, C, D, E, and now we're in the process of working through the A, B, and the C, right, to give us our Y. Now, this also, right, this kind of structure would certainly lend itself to looking for some market geometry, so I'm going to just go low to low and try and get these right on here. So that gets my attention if I get right on that. Okay, so we have a perfect tag, assuming I'm right on these. Okay, so note here. So we're tagging the median line as we hit the 38, right? So that's what we call confluence. So the idea being that if indeed this is correctly identified here, and this is, you might get a different count from a variety of eliticians, but I think this is reasonable. It's not an ideal shape for a triangle because of how close these pivots are, but I think it's our best alternate here, straight down for the A into the median line. So for this to now remain technical, you'd be anticipating here the push back here to come back towards that the downsloping upper parallel here relative to the median line. So a push back here, now this starts to make sense. So now we perhaps coming down here for a bite at the 50 here, if that's going to complete the C of the Y of the 4. So we don't, you'd prefer to see it hold here as a bull rather than go down and check the 618, right? That just, right? We see it, of course, we see it all the time, but it's just, in terms of the Elliott count, you'd prefer to see it hold the 50 rather than push it. It reduces the probability of getting up to a new high, right? Not that we don't see it, but again, with your Elliott hat on, you'd prefer to see it hold here. Of course, the target doesn't change, right? If we do go down here, target's not changing. But just in terms of Elliott, you'd prefer to see the 50 hold here, which would be, remember where I started here, talking about prior 3-4, right? Would be a typical range for this to come back to the test of a degree down, right? Lower degree. So we come down here into this zone here. We've got nice market acceptance here from all of this chop here. So that would be an area that would be of interest. All right, I'd certainly pay attention to that. Now, of course, nothing says that we can't, this isn't our low and we're off to the races here. You'd have to readjust this count. Boy, it's going to be, not sure how we're going to do that. But so my best guesstimate here is that there is an opportunity so if we pop into this region here between the 50 and the golden zone here, that's going to be a potential for a sale. So let's take some of this off here. So we'd have that, but you could certainly draw another one. So if we went down to the hourly, let's take this off. If we come into that zone, right, you're going to have a few choices here. So from the E, the proposed E, I get right into here, something along those lines. All right, or we could go to a shift. Just if we're going to the shift, then we're looking for something down here at the lower parallel. Right, could get, okay, whether we're going to go 150 or kind of remains to be seen. But then I would just additionally look for other confluence. Now I don't have the B, so it's, this is kind of trying to structure out a roadmap here. So if we come here, well, Right, here's to the 618. Here would be the 100, 1272. So you get this range down here that's particularly good. Well, you'd have to include the algo target here. So we get this range here from 1430 to 1412, which would be very much of interest. All right, now, if we put the other median line, do we get any confluence here with regards to the market geometry here? All right, so we've got this one perfectly. So here, I know it gets a little hard. That's where hiding these can be. Well, let's go back here and see if we can make that work. So I want to hide this one, which is this one. All right, so you might, knowing that that's there, so again, kind of coming back here, if we were to come back, get in anywhere in this zone, right? I don't have this pivot, but that's what I'd be looking for. Would I sell that? Yeah, I would. I'd have no problem with that. So essentially, you're trying to line up the bank shot, right? Sell it into the buy, right? So the idea being that this is all just corrective, right? But nothing says you can't play in the correction. When we put this top in here, September 19th, or pardon me, September 5th of 19, September of 19. So to come down here, there'd be a little over a month and almost a month and a half coming down here if we're going to do it at the end of November. So it's not quite a month and a half, something like that down here into this zone here. I'd be looking long and hard, right? Ideally, you'd catch it right at the 50, but don't assume we come down there. Algos are prone to front run. So if that's going to play WXY, now I'm definitely, it's a bit early to be projecting that because we don't have a pivot here. But you gotta lay something out. All right, so my guesstimate here, just swing last dominant pivot before we come down. Not unreasonable to assume the next thing that's going to happen here is a retrace into this area here. What we're going to have. Well, I'm just kind of looking to the left here. So we've got some structure here that's come into play. Pivot, 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 pivot. So it was support, 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 breaks. Now very strong candidate for the resistance if we come back here. Catch the B down to the C. Right. So now, if you don't want to be that aggressive, right, and you're looking to the long side of gold, for a variety, whatever your reasons may be, right, you certainly could wait and see if we get this, right, and then look to be buying into the correction down here. The idea being that it's the end of the correction, and then if you don't, you don't have to pick the pivot. You just wait. Do you get a reaction? Take the first retrace, right? Always the safer way to go because you've defined where your risk is. You know where you're wrong, right? So if you do something like this, comes down here, stops below the pivot. If it breaks it, well, maybe we're going down. Maybe we're going down here. Maybe you're back rethinking about this count here because this is a little iffy. It's an unusual shaping here before we head down. So you're making the assumption that this pivot to the 38 is not enough to finish. Even though we're hitting a median line, we're hitting the 38. We're hitting the 618 of this swing. Is that enough? Well, nothing says you couldn't do this, right? That you couldn't take this retrace, even if. So that the point being that if we get a retrace here, if we're bouncing here, well, so maybe look here, maybe we're going to do this. Here's the last pivot. So if we come back up here, right, because we're not there yet, we're right here at that structure, right? So if that comes down here, right, nothing says it must go that deep, right? We could come down here and then you're doing this. Right? You're buying it here. I mean, there's plenty of juice there. What do you got there? From 1457, if you're going to go to the golden zone, 1490? There's room. There's room to be profitable there. So maybe this all pushes over one. You're still thinking about this down here. Right? That's still where you think it's going, or where should I rephrase? All right, so if it does this, then my anticipation would be we're not done. We're just doing the A. Here comes the B we need an ABC to finish the Y. So that would give us the C to give us the Y of the 4 back in line with our market geometry. So I wouldn't shy away from this play, right? If you trade gold regularly, or if you're on top of this is on your watch list and you comfortable allocating some capital here, you've got the potential retrace here into the buy into the B. So you've got a potential trade here. You've got the short trade, right? So you've got a potential, you'd have to wait for this, right? I wouldn't sell right here. I'd wait for the retrace, right? I know where my stop is here. So I could, if we get a pivot here, you could buy into the long here. I'd be trailing with a stop. How would we say it? That would be cautious about making any assumptions that we're going to get through that. You know you're going to find resistance there, right? And of course, the other thing you're going to have to deal with is the swing high to swing low. All right, so let me get this one. Oh, shit. Let's get these off here. So let's look at the big one, right? The dominant. Well, here, let's get this one. Get the low of the low. All right, so all of this is going to be in play, coming back up. If it gets there, if we push further up, that's going to be there. That's going to be there. We're not in the clear. And considering we had a reaction at the 707, I'd prefer to see it get through that before we're going off to challenge that high. So you got a lot of potential swing trading here. Now, is it going to play that perfectly? Of course, we don't know, right? But at least, we never know, right? But the potential setups are here. So there, if we got this retrace, you took that long, win or lose, that's a very reasonable trade as long as you don't put your stop below the 6 something silly. Right? Very reasonable. Took some profit here and looked at a sell there. You're right in line with whatever, you know, you may have a different count than I do, right? But just stay consistent with what you see. Right? Into the sell. And all that does is set up the buy. All right, so you got potentially 1, 2, 3 trades, just all right. And we're down on an hourly here. And just watch them, right? So right, this could change easily. This count could completely be reworked based on some spike or action. You know, right now it's just a roadmap, right? You could change, make a right turn, left turn, something else happens. This could get completely reworked. But there's real value in anticipating the potential roadmap. If it deviates, then recalculate. Okay, guys. Try and get one more. Back to you in a bit.